Hi, I'm Jonathan Barratt. This 9-minute educational grab on oil is taken from 25 years experience, and hopefully it's going to provide those with valuable insight, I think, on how we certainly trade the oil markets. So it could be a little bit of fun here. And oil obviously is a great market to trade if you haven't traded it before. Essentially, oil, when trading the oil, you can trade it pretty much 4 ways. You can trade it as an equity via sort of Santos, one of the big mining companies, oil refiners. You can trade it via one of the ETFs, exchange traded funds. You can trade it via the futures and or the CFDs. Each one of those particular methods offers its own element of risk. Obviously, the futures and the CFDs are certainly the highly leveraged ones. You get leverage sometimes anywhere up to 50 times. So good for making profit, but it's a double-edged sword on futures and CFDs because you can certainly lose a lot as well. In this quick grab, it's a 9-minute grab, and we're going to talk about pretty much on the futures side of it and the CFD side of it. And the main reason for that is purely because that's the market that I like to trade. And after 25 years of trading this market, it does always present a challenge. But what we're going to try and do is just try and get through that, and hopefully you'll learn something from it. And I think that's the key. Okay, trading oil. Well, look, really you've got to look at both the fundamental and the technical side of it. And actually in oil, the fundamental side is pretty important. And you notice that through a lot of the data, we have the statistical side of it, and that's the Department of Energy and the API data which comes out of the States every week. That helps to give us a trend in how it's all operating in terms of the supply and the demand side of it, and also the refiner capacity utilization or refiner utilization, and those things are very important. The other side is the geopolitical side, and that's often quite an interesting one when it just hits the market, and obviously anything that happens in Iran, anything that happens in terms of weather in the Gulf of Mexico, all those things will adversely affect the supply. The other major thing which occurs for oil is obviously the seasons. A lot of people actually trade it seasonally. You've all heard of the summer drive time in the US, winter demand for heating oil. All these sorts of things affect the prices. In fact, oil is a good one to trade because if you get into the seasonal flow of trading oil, it can be quite rewarding because it's just a nice way to trade it, because I guess leading into, say, winter, we know that there'll be a bid bias to oil. Leading into the summer drive time, there'll be a bid bias to oil. And then when you get that bid bias, dips are supported, you get a geopolitical concern on top of that, and up she goes. One other thing we tend to look at is also just how the general economies are going. If the economies are expanding, then more demand for oil. And that also gives a good sense of feel for where the market will trade. So as you can see, oil is pretty much a fundamentally traded commodity, and the technicals are now just as important. And on the technicals, and that's what we'll focus on, is the technicals, because we can see what's actually occurring there or why the fundamentals are causing this, and that should end up with a pretty good trade. But let's have a quick look, and particularly look at the Falcon. Falcon Trader is what we obviously use, and on the Falcon you can trade the stock, you can trade a futures, and you can trade a CFD. And it's quite simple here. A stock trade here, all we're looking at is, for instance, any stock. If you really need to on the Falcon, all you need to do is type here oil, go into there and type oil, and obviously all the stocks from around the world that have anything to do with oil come up. So it's quite an easy way to look at it in terms of what you're trading. That's the stock side of it, and obviously very easy to get access to. You can turn around and say by exchange. You can also do it by sectors, and there's some of the ETFs on oil. So that's quite easy on the stock side, and you can certainly trade it on the futures side as well, and it's just a matter of just going futures trade, and CL, and obviously there it is, and you've got the bid offer price for crude. And of course we've also got the CFD as well, and the CFD here, which is actually a good trade if you're just getting in. It's a good method because oil, if you trade in the futures, you've got two contracts. One which is 1,000 barrels, which means that every dollar is 1,000 US dollars, and the other one, which is the mini, which is half that. But on the CFDs, it's good because you can really trade a small amount, anything up to, say, 50 barrels. And the nominal there is only 4,000. So it's a really nice, and margin's $400. So you can get exposure without that risk on the CFDs. So it's not a bad way to access the market if you're just starting. Okay, let's have a look at what's happening in the oil market at the moment from a technical perspective. And obviously, here we are. We're just coming to the end of February, and you can see that we're in a range. The low's been 70, and the high's been 82, and the actual high was 83.90. But it is in that range, and we're towards the top end of the range. So at the moment, our expectations are perhaps that it'll come into resistance at the moment up here, and we might see some price rejection. But it is quite interesting because at this particular time, we're basically coming to a period where the Chinese New Year is ending. We're coming into the summer drive time, or the build for the summer drive time, so that might keep prices relatively well bid. But and that could keep prices towards the top end of that range. One thing with crude, which I think is important, is that it is a relatively good trending market for some time, and as you can see, these areas of trend here work quite nicely. So you can always trade crude on a break to new highs, and it just makes way for a nice, easy way to trade. Okay, so that's where it's trading. As you know, when we technically look at these trades, we technically look at the daily chart first, and then we work our way down to the hourly chart. And as you can see, the hourly chart represents a slightly different feel for it, because we are at this top end of the band here, and that's obviously up around that 80, 80-30, 80-40 area. So if it breaks through that 80-70, then we could see the trend continue. If it fails, then we just fall back into the range. And that's it there. Okay, you can see there, it gives a little bit of a picture there. So a break through that, up she goes. Fails, then we're back into the range, and we come back to 79. If it comes back to that 79, then it is a low-risk trading opportunity, because you can always buy it, whether a future or a CFD, and have a stop just below that area there, and 68. So you can actually risk, limited risk, but maximum opportunity on that. Now, one thing which you can do on the Falcon, which I think is quite interesting, obviously you can keep an eye on your data. And on the data here, we have it on the Falcon for you. Just keep an eye on the DOE energy, crude inventories, gasoline, distillate, the refinery utilisation, all this important data which you keep an eye on. Obviously, the fundamental side there translates into what's happening on the charts. So that technical thing there just might, technically, you can actually see that anything that happens in the fundamental area will transcend into the technicals. So technically, a break through that top side, up she goes. If not, we might pull back to this area, which is probably our preferred position. But that's what we're saying. I think overall, I think as the economies move out of this recession, demand should pick up. But one thing at the moment which is interesting is that the inventories continue to build, yet the price goes higher. Now, that's an anomaly which does sometimes happen because people are looking at the expectations of coming out of this recession, and as a result of that, they're trying to hedge themselves earlier rather than later. And I think that's something which you find is quite normal. But let's see, keep an eye on the data every day, and that could give us a bit of a break as to what's happening there. But our preferred position is buy on dip. So that's just a quick 9-minute talk on what we think about crude and how to trade it. If you've got any questions concerning, give us a call on 1300 660 734. That's 1300 660 734, and it could be quite it's a good market. Let's put it that way. So happy trading, and we'll talk to you a little bit later.